In this presentation, we will track and pay bills within QuickBooks Pro 2020, QuickBooks Desktop 2020. Here we are in our Get Great Guitars file. We currently have the Open Windows open. You can open the Open Windows by selecting the View drop-down up top and choosing the Open Windows list. We're going to be currently in the Vendors section. We're going to be concentrating on the Pay Bills icon here, the Pay Bills section. Now, note as we think about this process, when we look at the arrows going through the little vendors section here, normally what happens is for anything that is not inventory, we will then typically enter the bills here and then pay the bills. Now, you might be saying, well, why would we do that? Why don't we just basically write a check and not pay the bills? Because the pay the bill feature over here is in essence writing a check, making the payment. We could just skip down here to the write checks. You are correct on that. That is true. We could just skip down to the write checks. However, it could be useful to enter the bills for a couple different reasons before writing the checks to go through this system. If we just write the checks, of course, it'll just be a straightforward transaction. We will write the check. It'll be decreasing the checking account, the other side going to wherever we assign it to go, oftentimes expense accounts. If we choose this option up here, then we can basically enter the bill when we get the bill, as opposed to us to kind of like sort the checks. We have you can imagine all the checks or the bills on our table, and we're trying to sort which ones we want to pay. Well, if we're working that kind of system, we would much rather put the bill in the system as a bill item here, and this is what the form will look like. It looks like a check, but this will be a bill. The bill meaning accounts payable will be increasing and what other side of account will be affected. If we do that then, for example, if we enter the utility bill when we get it, the electric bill when we get it, contractor bill when we get it, whatever, then it's going to be recording the expense closer to the point in time you would think that the work was done, because we're entering the bill as we get it, which is typically when the work was done. And you also have the advantage of it then sorting the bills so that we can then adjust and think about when we want to pay them in a systematic way. So in other words, if I close this back out and then go to the Pay Bills section, the pay bills will then be sorted in this format. Now, when I check these off, I'm in essence just basically making a payment. Generally, we're going to be thinking about writing a check, right? We're just basically writing a check, same form for this. But if we have multiple bills, we can sort this in such a way that we can sort which ones we want to pay, when do we want to pay them. So that means that we can put the bill in the system at the proper time and that record the expense more close to the proper time, and then be able to sort the bills and think about which ones we want to pay in a more easy type of method in this format. This could also be useful if you want to print the checks out of the QuickBooks system. You're still going to need pre-printed checks in order to have the check numbers that you will then have to put into the printer to print them. I find it useful to actually check off the ones that I want in this system and then put the checks in the printer, and then I can just use this screen to print them all at one time. So I find this easy. You could still do that with writing checks to say to be printed. However, I just find it easier to print the checks in this format. So if you're going to be printing the checks out of QuickBooks, this then also might be a method you would want to use. I'm going to close this back out. Note then, if you're talking about anything that is inventory, will be different. This will be the process for anything that is not inventory that you're making a payment for to the vendors for. However, if it's inventory, as we've seen in our process up here so far, we may create a purchase order. If we're purchasing the inventory, remember the purchase order is a request for inventory, so it depends on the type of inventory we are purchasing and our relationship with the vendor to see if we use the purchase order or not. It would be only used if we basically order the inventory before we make a payment for it. But then we're going to have the bill where we basically enter the bill for inventory. Same item here. We have the bill, and then once we have the bill, we are in essence going to be making the payment on it. So we've done that in the past. We've entered these bills, and now we have to pay the bills. So now we have the Pay Bills icon here. So that's what we'll do here. So this path down below is for anything that is not inventory. The path up above is basically for inventory. The major difference being that, of course, we need to be tracking the inventory by inventory item if we're using QuickBooks in order to track inventory. So that's what we've done before. We've entered the bills. Then if we go into the pay bills, we've entered those two bills related to inventory, one for Fender, one for Epiphone. We'll use this system a little bit more when we pay normal bills later. These two bills are from our major vendors that we buy inventory from. So we have the sorting. You could sort due on or before, which could help the sorting. If you're in a company that has a lot of payables, it could be a lot of information here, and the sorting options are helpful. You also have the filtering options, which can be helpful as well. We only have the 2 items, so it's not going to be difficult for us to sort these items. We're only going to be paying the one to Fender. So we're going to say, hey, I want to pay this one. Epiphone, we're not going to pay for a little bit. We have a agreement with them. We're okay with them. We're going to pay Fender because they are our newer vendor. So we're going to take that one, and then if we go down below, we're going to say that we want the date to be the 21st. That is correct. That's what we want there. The method, we're going to say is going to be a check. Obviously, we have check, credit card, and then we could either print it. So if we were to print it, remember, you would have to have the pre-printed checks that you would then put into the printer in the proper format, and then you would print these, and you can print them in that format. We are not going to be printing them. And that might be a method you may be using too. You might be writing a check out of the checkbook and simply basically entering the data then into QuickBooks to populate the data for the financial statements. That's what we'll do here. It will be coming out of the checking account, of course. That will be the general option. We're then going to say pay selected bills. And then we have how do you wish to assign the check number? I'm going to let QuickBooks assign the check number. I would like to let QuickBooks assign it, because it should assign the next check in order. If I take the check from my checkbook, then I'm basically overriding the system. I'd like to let QuickBooks assign the check, and that's kind of a double check in case checks are missing, checks are stolen or something like that. We want that pre-printed check format to help us. So I'm going to then say OK, and then it's going to give us our summary report. Notice the check number that it assigned to us. There's the summary report. I always then go to the register to just double check. So I'm going to close this out, and then I typically go to the register. So I would go to the banking, I would go to use register and go to the checking account. That's the one I want. Say okay, and then just double check, because if I have my check account in hand or my checkbook in hand, I just want to double check right here that that 1014 matches the check that I have written if I'm doing that in that format. Actually, in this case, it was the 1015 for Fender, the new vendor. And also note that it's a pay bill check. It's still a check here, but just note that it's a little bit different than what QuickBooks assigns the normal check. The pay bill check means that you're writing a check against accounts payable, and it's useful that QuickBooks gives that little added detail. But note they're not 2 different things. It's not like it's still a check, but you're writing the check against accounts payable, which is a nice little detail added. Closing this back out, let's take a look at what happens in terms of the reports. We're going to go to the reports up top. We're going to go to the financial company and financial. Scroll on down to the balance sheet report. We're going to change and customize the reports in the upper left. We're going to change the dates from 01/01/20 to 12/31/20, and then say OK. And we should think that the checking account should go down. So if we double click on the checking account, scrolling down, we see that 168 checking account went down. Notice once again, it's a pay bill check. That just means it's still a check. However, it was a pay bill check, meaning it was done against accounts payable. So that will mean that the other account, as we can see over here, is accounts payable. Double clicking on it, there it is, and it's actually in the format of a check. It's not going to be in the format of the data input screen that we had put in place. So we're going to say there's that. We're going to close this back out. The other side then is going to be going to the accounts payable. So the accounts payable here, double clicking the accounts payable, we see then the check to Fender, the 1015, once again pay bill check, meaning it came out of accounts payable. If we double click on it, there's the check once again. If we close this back out and close this back out, then we can double check the detailed report on accounts payable in a similar fashion as we have done with accounts receivable multiple times. That's going to be in the reports drop down. We're going to go to the vendors and payables. We want to look at the vendor balance detail. Vendor balance detail, then with Fender, our new vendor, we have the 168, there's the bill, and then here's the pay bill. Here's the kind of things we would expect to see, of course, in the payable account. We're going to see basically a bill, increasing the payable, a liability, and then us paying the bill, which will decrease it. So if we close that back out, back to our balance sheet. And then we could just review the balances if you so choose to see if we're at the proper place at this point in time. If anything is off, you can go into it and zoom into it, look at the detail. Notice that we will be providing backup files so that if you would like to push forward instead of, reworking the numbers at this point in time in the problem, then you can take a look at those backup files and just keep pushing forward.